Be honest. Come on, man. You're witnessing a new era, okay? The stash is here to stay. So you're either gonna like it or you're gonna get out. Honestly though, what do y'all think? Purpose of this video is to give you guys a weekly outlook, what you guys can do watching this video right now. All I'm gonna give to you is basically just my ideology going into the week using price action itself, the charts, everything that I use to trade off of. I'm gonna give you some insight into it, how I use it, what I'm gonna be doing going into tomorrow, all based off of this. This is something that's so overlooked, I think, in trading, is you guys never really set yourself up for the week. It's always wake up on Monday and just kind of go into it. Sunday's the warm-up, man, and of course we just took a loss. Alerted this in the Discord, 18-point SL on this trade. We were really bearish coming into today. Ironically, I was bullish. That's kind of why I sat on this. I wanted to play longs all night so far. Big sells come in. We're waiting to see some sort of proof of bias. Here was a potential, but I didn't, just because we were so close to the open. It was still pretty volatile. I hadn't seen enough price action just yet to give me a good side. Ended up taking an entry right at this 5-minute candle close. You guys see kind of just starting to curl a little bit, and finally saw this nice breakout to the upside and got in at the candle close. But until we break below this, I'm still long, so I'm still looking. Guess what we're doing right now? Deleting everything. Set up your NQ chart just like mine, so you can go into the week just with some good levels and an idea of where price should be going and potentially reversing. Step 1, I love to go in the 4-hour, get these big zones. These are zones we're not trading off of, but these are key zones because it will give us an idea of the current trend and where we can look to potentially flip our bias. What zones to mark out? There's so much to mark out. This is the easiest way to do this. Of where the price is right now, find the high and find the low. And you're asking, why isn't this the low, or this the low, or this the low? For me, honestly, it does become kind of personal, but I want to see kind of a big move like we did here and like we did here that can really mark out the high and the low of the session. For me, in an area like this where the wicks are overlapping, I just like to mark both of them out. You would start at this wick, go all the way down to this wick, and in this spot, you could just go ahead and mark the high. So boom, we have our high, we have our low marked out. Now what can we do? Reminder, these aren't areas where these aren't areas we're technically supposed to be trading off of, but you can, in a sense, if you go a little bit shorter time frame. For example, now we go in the hourly and we try and find a way to minimize these zones. The way that I mark my zones, I want to always have the best entry, making it as small as I possibly can while still bringing some value to me. Meaning, for example, we just marked out the high and the low of these two overlapping wicks. We're going to go in the hourly and we're going to minimize this wick. Making it smaller gives me more opportunity to trade off of it, and not only more opportunity, but also a clear indication of a smaller area where we're really expecting the price to kind of reverse. And on the 1 hour, we're going to minimize this and just put it up to this high. Think about it like this. Once price enters this area, of course, we're looking for sells. But the higher this goes, the more likely we're expected to see a quick move down. Rather than just getting in right here and trying to have a stop loss here and just hoping that it stops, we're actually waiting for price to come up, see the rejection, wait for the close, get in, stop loss wherever it rejected. Now that we have our zones revised, what we want to do now is kind of just establish a bias. Now this is where, again, it can be very personal. We notice that the 1 and the 4 hour, very simple. If you need to find the trend, you just zoom out. Very simple and clear that the trend is bullish. Hourly, bullish as well, but recently you guys can see we got a lot of sells coming in here. So short term, you can be short-sided and you should be playing the short side, but in reality, what you want to be looking for is retracements. A retracement is, again, a big buy up, retracing back to a lower high, boom, moving up. For me, I like to use EMAs a lot in this case. You guys see on the hourly, we're actually underneath the EMAs, which can be a sign of bearish sentiment. On the 4 hour, this is the area where I'm expecting to see some sort of pullback. If we bottom wick off this, you can get in a trade, stop loss wherever it stops. For an example, this is an entry for a retracement style entry. We hit a high, sales pushed down, rejected off this EMA, bought all the way back up. We'd get in at this candle close, stop loss would be here, and we did see buys off of it. So in this case, this trade would still be a win for me, just because you guys need to stop looking at the outcome of the trade being your success or not. This is a success for me because we got in, we waited for our entry, we got everything we wanted to see, boom, we got in and we saw buys play out. But once you get in at that point and you see buys push up above you, there's nothing you can do in that trade at any point further. When that candle closed, we saw buys. In my eyes, that's exactly what you want to see. You have to hope that buyers will continue to push this up. Trend just took over and we got stopped out. But as long as when you get in, you see the side you want to actually play out, there's nothing you can do past that point. There's nothing I can personally do to make it go any higher. As long as we were right about it potentially pushing up, we did see that, but sellers had other things in plan. We would have got stopped out, you just move on. Now here are the areas where we can actually take trades off of more likely. I could add some higher zones up here, but price has already broken them. So we want to make sure the zones that we're trading off of have not been used yet. Now you can use repeated zones and sometimes those actually work better than others, but for now you just want to stick to zones that have not been touched yet. So for example, this is an area where I am 100% looking to strike for longs. We look on the 15, we see this bottom wick we have right here. That is so money. I would love to take longs off of this, and how we would do it is we'd wait for this price to come down. We'd wait to see some buys. Once the candle closed back above, we'll take longs and then we'll have the stop loss wherever it rejected off of. Something like this, it would come down, we'd see some buys push up, candle would close right here, stop loss would be here, and we'd probably run a 1-to-1 or target any sort of high we can find. Not only do I really like this because it's a zone that has not been used yet, it is a zone that, look at how well this rejected off of this buy area. We saw a bunch of buys, and look at what happened after the fact. Big break above, sell off, huge buys, continuation. That is everything you want to see in the zone, and it has not been used yet, so that's another benefit. And also, not even thinking about it, guess what? Look what happens. We wanted to play that 4-hour retracement. Look at this. Guess where exactly this zone holds? Right in the 4-hour retracement. I'm tough, bro. At that point, you just want to wait for a strike, and we will see if this price comes down to it. It looks like it's going to. At that point, you would just wait for this to play out. It looks like it's going to actually hit this area, so if it sells through and we buy up, we'll take longs. If it breaks through, then guess what? We don't need to worry about it. And right now, looking at price, that's really the only area on the 15-minute we see wicks, willing enough for me to actually trade off of them. And this is a great area because now guess what? We have a high, we have a low, and we have a median zone. Now a median zone really doesn't mean anything. It's just kind of a visual example for you. We have an area to trade off of up here, we have an area to trade up here, and we have an area to trade up in here. Best thing about supply and demand is we can play both sides of this. If we break above this, it will now turn into support. If we break below, it will now turn into resistance like it is right now. If we break below this, it'll now become resistance. If we hold this area, it'll now become support. Same thing here. If we hold this area, this will be support. If we break below it, this will be resistance. That gives us 1, 2, 3, 4, 5, 6 potential entries just off of that areas of trade. Meaning I can take buys or sells off this depending on how it reacts. Buys or sells, depending on how price reacts. And I don't even need to get more into it. I think that was a pretty good example of just mapping out, going forward, what can you expect and what am I looking for. Now I know when I wake up tomorrow, I can see how these zones react. I can see if anything changed. I can revise them. I can add or subtract anything I need to. And I can set up a bias with the news, with price action, the big time frame stuff, everything together. You'll have a clear bias and a clear idea of exactly what's going to happen today. And just give yourself more comfortability, bro. It makes it so easy to wake up and take trades when you do the work, when you set it up, and it's just way easier. Please like and subscribe on this video, bro, and anything you want me to talk about, comment below. And if you want free access to 3 videos from my mentorship, that link right there, and fill out that little survey. I've got a huge thing planned in about 2 weeks. Gonna shake shit up. See you guys next video.